Good morning everybody and welcome to this SmartCharts European Session. Hope you're all well. So there is one high impact news announcement coming out in the course of today, and that is the US ISM Manufacturing PMI report. And this is released from the Institute of Supply Management and at 3 p.m. GMT UK time as an index based on a survey of around 300 different purchasing managers within the manufacturing industry, asking them to rate the level of business conditions. So asking them to rate how the employment situation is, how the supply chain is, and deliverables are, and so on. And it's considered a leading indicator of economic health because businesses tend to react the quickest to changing market conditions. And the forecast is for a 48.2 figure. Now, anything below 50 does mean that that industry is contracting, and anything above 50 means that it is expanding. And there's been a bit of a negative trend in the manufacturing number actually over the past several months. We saw a little uptick in December, but for the prior 3 months before that, we did have negative numbers. So it'll be interesting to see if December was just a bit of a blip because of the holiday season and increase in the manufacturing industry in producing goods and services. So if we get back to the negative data, it could impact the US dollar, so it's something to keep an eye out on. And we look at news announcements for three important reasons. First one, risk management. Okay, sometimes you might find yourself quite concentrated in your positions on a certain currency if there's a really big theme on that currency. So you've got to be a little bit careful about how many trades you have on a currency before a high impact news announcement, because if the market goes the other way, you can get hit on all your trades and take an unexpectedly large loss in a short period of time. So we've got to protect the account and mental capital as well. Okay, so risk management, very important. And second thing is we look for any surprises. Okay, are there any surprises in the data? Because we know everything is already priced in. So from the work we do in your Learn Forex 3-day Learn Forex workshop, from your trader certification program, we know on the first day we go through how the market works, how the flows are created by the larger institutional speculators. So we know everything is already priced in. So when there is a surprise, this is where people readjust their positions, where sometimes we get some really big moves. Sometimes they're tradable, sometimes they're not, but our job is to identify as many different clues as possible the market is presenting to us and see if they are tradable and just try and turn that edge over as many times as possible. Okay, we saw this yesterday with the unemployment claims report that came out from the US. It was actually much better than expected, caused a huge rally in the US dollar, which actually helped our trade from yesterday on US dollar against the Swiss franc on the phase changer strategy, and that actually helped it to get to the target level and close the day in the profit. Okay, so let's see what is in store for the US dollar today. We are at the end of the week, so we might actually see a little bit more profit taking in the US dollar because it has been a pretty strong currency for the past several months. Let's have a look at this inside of SmartCharts and get an update from the technical analysis side. Okay, so if we look at the Tools tab, Currency Strength Index, something we highlighted yesterday and actually for many days over the prior several months. We know the US dollar has really been pretty strong. Okay, so the US dollar is here right now, so it's a strong currency. But we have historically seen, even yesterday, the US dollar was the strongest. It was up here. Okay, so it is still strong, but you can actually start to see there are other stronger currencies that are now beating the US dollar. So we can see that the Canadian dollar, the Aussie dollar is starting to get a little bit stronger than the US dollar. So what we want to be doing, again, if you're like a short-term, fast time frame trader, then you want to be using the Currency Strength Index to identify the strongest currencies, the weakest currencies, and basically try to buy the strong currencies, sell the weak currencies, of course if there's any opportunities to do so, because currencies are paired, they act like a seesaw. When one is rising, the other one is falling. So if you can identify the strong and weak ones, it's where we can get the bigger trends. Okay, if you're more of a medium to higher time frame trader, then you might be looking at the Currency Strength Index and saying, well, look, this currency is quite strong, this currency is quite weak. If they're approaching some significant levels of support and resistance, we might actually see a bit of profit taking, all right? And you might be looking for trend reversals. Or you might be tracking the data on a daily basis like we do, and you start to see shifts So for example, we've started to see the shift in the US dollar, which has been very strong, but now it's becoming a bit weaker. Considering we're at the end of the week, we might actually see a bit of profit take in from the strength that we've seen in the US dollar, all right? So based on that, this is why actually today, one of the opportunities that have been highlighted on the SmartCharts London and Sydney trading floors is actually a bit more of a reversal trade in the US dollar. Whereas yesterday, we were trading a trend continuation trade in the US dollar on your 4-hour phase changer strategy, and that went quite nicely to the target. But now today, we'll be looking for a bit of a reversal in that in the US dollar. And this is why, if you go to the charts tab and if you go to the vol reversal, now your vol reversal is one of my favorite strategies. I have many favorite strategies inside of SmartCharts actually. And remember, every strategy, what does it do? It helps to identify and trade different market conditions, right? Different situations that are developing in the market. So yesterday, we were trading the phase changer strategy on US dollar against the Swiss franc, and we traded this little move here, looking for the market to continue the trend in the US dollar, okay? And that's because that strategy, the phase changer, is one that we go through on your 3-day Learn Forex workshop and your trading certification program. It helps to identify these momentum trends that are developing in the markets. But now today, based on the news announcement, the time of week where we're at, and of course the underlying market strength from the tools tab, we'll be looking to try and trade a bit of a reversal here in the US dollar, a bit of a pullback. So this is why the vol reversal strategy becomes quite useful. So this is another strategy that we go through on your 3-day Learn Forex trading certification workshop, and it's one that helps to identify and trade trend reversals and trading ranges. And it does that by utilizing fractals, the green and red chevrons on the chart, which aim to replicate swing highs and swing lows in the market, the turning points of the market, okay? And essentially we look for exhaustion patterns known as double top, double bottom patterns, okay? But of course we don't want to look at them at just random places in the market. We want to look at them as significant places in the market. And if we look at Aussie US dollar, if we zoom right out the chart, we are at a pretty significant place, because if we take this little pencil icon and click the horizontal line, what do we notice? Okay, you can see that price did break through this major swing low point here. Okay, so in December it broke through. However, what's happened is tried to make another leg lower, but you can see it hasn't really made a lower low cycle. Price is just really what we call bottoming out. It's struggling to continue to push lower. Okay, so in this instance, yes, this might have broken out this support level because it's, you know, around the Christmas holidays. There's not a lot of liquidity, not a lot of buyers and sellers around to protect those levels. Just the algos just building positions automatically, so levels might break. But you know, we're now back to full trading. People will get to their trading desks. So a lot of people might be looking at this thinking, okay, this is pretty overextended. Maybe in this new year, all these short trades that we've been selling on the way down, we've made a bit of money here. Well, let's start taking some profits at the table, right? Let's start the new year with a bit of profit. So you've got to think about how the rest of the market is positioned. And if you look at this, if we take another horizontal line here, you can see that potentially we are you know, trading around the bottom of a very long-term trading range, all right? And you can see that even at the top here, you could put a horizontal resistance line even somewhere around here, and you can see, look, we've had turning points, turning points, turning points. Price tried to break through here. It was a false breakout. So just like we've had turning points, price did break through here, but it'd be interesting to see if this will be a false breakout, if we're going to come back inside of this trading range. Okay, so considering all the other factors we have on why we're looking for the reversal of the US dollar, this now becomes quite interesting. So in this instance, we would just look for the vol reversal, these flashing currency pairs, to be setting up around sort of significant levels of like support and resistance, which can give us a bit more of an edge of a turn happening in the market. So on top of helping to identify those opportunities, smart charts will also help the risk management side. If you click the up icon, populate an entry price at the blue dot, stop loss at the red dot, target the green dot, and it will do all the risk and portfolio management calculations for you automatically. I like to set an expiry of a current bar close on this particular strategy and time frame, and simply decline or accept the trade here at the bottom. Okay, and in this instance, you can adjust all those entry, stops, and take profit levels if you want to, according to your own user preferences. You can, smart charts will automatically do the risk management calculations, and you can adjust that accordingly as well. Just really important to keep the risk low. Make sure you're able to deal with the random distributions or wins and losses that develop throughout the day, throughout the week, throughout the month, right? And in this instance, if buyers don't turn up here, okay, and get to the entry level, then this pending trade will just expire. Didn't win, didn't lose, didn't cost anything. But if they did decide to turn up and get through the entry level, this will trigger into a live open trade. Then either it goes to the target level, the green dot, or the stop loss level, the red dot. Okay, now, so either it becomes a winning trade or a losing trade. Now in this instance, if we do get the reversal on the US dollar, then we actually will be looking for this to run a little bit more, okay, and maybe get into some of these historic levels of resistance over here, some of these low points. So we'll give it a little bit more room to breathe if we do get that little pop higher, okay. All right, that's it from me. I'm going to wish you all the best for your trading. Bye for now.